What if I told you that our dividend hero made hundreds of dollars in August by doing, well, nothing? Yeah, you heard that right. Our hero let his money do the heavy lifting while he kicked back and collected dividends from some of the biggest players in the game. And guess what? You can do it too. Curious? Keep watching because he's breaking down exactly how much he earned stock by stock and how you can start building your own passive income machine. Over to you, DH.
Welcome to the breakdown of my August 2024 dividend portfolio on Robinhood. Today, I'm not just sharing how much I made, I'm showing you the power of compounding returns and why reinvesting every cent makes a massive difference. If you're ready to see your portfolio snowball and start earning passive income, this is for you. Let's jump right into it. Apple, AAPL. Let's kick things off with Apple. It's the stock that's probably in everyone's portfolio, but let's talk numbers. I own 19.74 shares of Apple, and with their 25-cent per share dividend, August brought me $4.93. That's right. Apple basically handed me cash for holding onto their stock. Sure, Apple's dividend yield isn't the highest, but when you're talking about a company with explosive growth potential and massive cash flow, even the smallest dividends are a sweet bonus. Every little bit reinvested is fuel for future growth. Here's the kicker. That $4.93 got reinvested, picking me up an extra 0.022 shares. Doesn't sound like much. It all adds up. Stick around and I'll show you how. AbbVie, ABBV. Next up is AbbVie, one of my power players. Holding 18.78 shares, they gave me $29.11 in cold, hard dividends, thanks to their generous $1.55 per share payout. AbbVie is a dividend juggernaut in the pharma space, and their commitment to increasing dividends makes them a cornerstone of any income-focused portfolio. Now, here's where the magic happens. I reinvested that $29.11 in Boom. I scooped up an additional 0.15 shares. AbbVie is the gift that keeps on giving. Costco, Tiost. Moving on to Costco, everyone's favorite wholesale giant. With 4.48 shares, they paid me $5.19 at $1.16 per share. Costco's consistent growth in both revenue and dividends makes it a no-brainer for long-term investors. They're not about flashy yields, but a reliable payer with room to grow. And you bet I reinvested that right back in, snagging myself 0.006 shares. Yeah, it's small, but every share inching forward gets me closer to bigger future payouts. Let that sink in. JP Morgan Equity Premium Income, JEPI. Now let's talk about JEPI, a monthly dividend machine. With 60.09 shares, they hit me up with $17.39 for August at a payout of 28.9 cents per share. JEPI's unique strategy of providing steady income while capping risk is a game changer. I'm stacking those payouts monthly and reinvesting to let the income snowball month after month, which pulled in an extra 0.31 shares. This is the beauty of JEPI. It's consistent, it's monthly, and it keeps the cash flow. JP Morgan Nasdaq Equity Premium Income, JEPQ. On to JEPQ, another ETF working hard for me. I own 64.89 shares, and with a 42.6-cent dividend, August brought in $27.69. This one's a bit more tech-focused, giving me access to Nasdaq income. And with a payout like that, you can bet I reinvested to lock in more shares for future gains, boosting my position by 0.55 shares. With every reinvestment, the passive income cycle grows stronger. Nasdaq volatility. I've got steady income rolling in to balance it out. U.S. Equity Premium Income ETF, USAI. Then there's USAI. I hold 112 shares. And for August, I pocketed $13.50, thanks to their 12-cent payout per share. USAI gives me exposure to the energy sector with a healthy monthly payout. reinvesting those dividends is a great way to build up my position without adding more of my own money. Of course, by reinvesting that right back into USAI, I am grabbing another 0.39 shares. The more shares I build, the more income rolls in next month. It's like clockwork. SPDR Dow Jones Industrial Average ETF, DIA. Let's get to DIA, where I own 8.7 shares. They gave me $1.69 for August. Nothing flashy, but reliable. And yes, I reinvested that too. DIA is a solid foundation ETF that tracks the Dow, providing stability even when the market gets bumpy. That steady dividend payout keeps adding up over time. I may have only picked up 0.004 shares, but like I said earlier, every fraction counts when you're playing the long game. Wisdom Tree US Small Cap Quality Dividend Growth Fund, DGRS. For DGRS, I hold 70 shares, which earned me $6.37 with a 9-cent dividend per share. Small cap companies can be volatile, but DGRS focuses on quality dividend growth, making it a smart pick for adding a bit of high growth potential to my dividend income strategy. I reinvested it into 0.12 shares, and here's why this matters. Small cap growth with consistent dividends is a powerful combo. It's like planting seeds today for a massive harvest tomorrow. Vanguard Long-Term Bond ETF. Next, there's BLV, my bond ETF. I hold 46 shares, and they brought me $12.52 in August at a payout of 26 cents per share. That went straight back in, adding 0.16 shares to my total. It's slow, but bonds bring stability to the portfolio while still paying dividends. BLV adds stability to my portfolio. It's not flashy, but bonds pay out regularly, and reinvesting those dividends keeps the income coming in, even when the stock market is on a roller coaster. Vanguard Tax-Exempt Bond ETF, VTEB. For VTEB, I own 66 shares and earned $8.70 in August, thanks to a 13-cent per share payout. This tax-exempt bond ETF is a great way to get consistent income without the tax hit. Reinvested that right back into 0.17 shares. Tax-exempt bonds give me income without Uncle Sam taking a chunk out of it. What's not to love? eShares National Muni Bond ETF. My MUB position consists of 31 shares, and they paid me $8.28 at 26 cents per share. Municipal bonds are another tax-friendly income stream, and reinvesting those payouts back into MUB ensures that my portfolio keeps growing, even with less risky assets. That $8.28 was reinvested, adding another 0.076 shares. It's slow, it's steady, and it's part of the passive income engine. eShares Short-Term National Muni Bond ETF, SUB. Next up is SUB, where I hold 32 shares. I earned $5.81 in August at 18 cents per share. Short-term bonds offer stability and predictable income, which is perfect for balancing out higher-risk stocks. Reinvesting brought me an extra 0.055 shares. It's not about the speed, it's about the consistency of these payouts. Main Street Capital, MAIN. MAN is a heavy hitter in my portfolio. I own 74 shares, and in August, I pocketed $18.34 at 24 cents per share. This business development company pays out monthly, and the reinvestment of those dividends added another 0.37 shares. Maine is a dividend machine for anyone focused on monthly income. More shares, more income. It's a simple formula that keeps working. Gladstone Investment, GAIN. Now, GAIN also pulled its weight. With 248 shares, they paid me $19.88 at 8 cents per share. GAIN is a business development company, BDC, that pays consistent dividends, and reinvesting back into it means I'm building up even more income every month. More shares mean more cash flow down the road. Reinvesting boosted my position by a whopping 1.53 shares per month, gaining on gain, literally. Gladstone Capital, GLAD. For GLAD, I own 160 shares. They paid me a strong $26.42 and 16 cents per share. BDCs like GLAD provide reliable monthly income, and reinvesting those dividends back into the stock has helped me add over 1.15 new shares. That means even more passive income next month. That dividend went right back in. It's the reinvestment that really gets the compounding magic going. Realty Income, oh. Finally, there's Realty Income, aka the monthly dividend company. With 65 shares, they handed me $17.12 for August. Realty Income is a rock-solid REIT with monthly payouts. Of course, I reinvested that, adding another 0.28 shares to my position. Realty Income is one of the most reliable monthly payers around, and the reinvestment will just keep pushing my income higher every single month. Back to the studio.
Thanks, DH. As you saw, our hero had excellent returns this month. And here's the thing. If our hero can build this kind of passive income stream, so can you. The key is consistency, patience, and reinvesting those dividends. So what are you waiting for? Start building your portfolio today. It's amazing to see how these different investments come together to generate a reliable income stream. The power of dividend investing is in its ability to build wealth over time through consistent reinvestment and patience. And if you want to keep following our hero's journey and learn more about how you can grow your portfolio, make sure to hit that like button and subscribe. All right, let's talk totals. Here's how much our hero made across the board in August 2024. In quarterly equity dividends, he pulled in $39.23. In monthly ETF dividends, he brought in $66.64. From monthly bond ETF dividends, he earned $35.31. And finally, in the monthly BDC and REIT dividends category, he racked up $81.76. That brings the grand total to $222.94 in passive income. Not bad for doing, well, nothing, right? Now I want to hear from you. Drop a comment below and let me know what dividends you received in August, or if you're just getting started, tell me what dividend stocks are on your watch list. If you're just starting out, don't worry about the small numbers. Focus on building your portfolio, reinvesting those dividends and staying consistent. Month by month, year by year, you'll see how this strategy builds wealth. So keep investing, keep reinvesting, and let's keep building that future together. Remember, passive income is all about the long game, and our hero is just sharing his journey. Always consult with a financial professional before making any investment decisions. Happy investing!